Coming up, the potential budget impacts on the share market. CSL shares crash, and we take a look at the latest interest rate expectations. All of that and more next. Hi everyone, welcome to the SBS on the Money podcast for this Monday, the 11th of May 2026. It's federal budget eve and a day where the Australian share market fell. The S&P ASX 200 down 0.5% to 8,701. That's as oil prices surged to above 105 US as the US rejected Iran's latest peace proposal. The Australian dollar at 72.3 US cents at the market close. The banks were down across the board today, ANZ dropping 2.5%, but it did trade ex-dividend. But the main reason the index fell today was because of its 16% thumping of CSL. It revised down its earnings expectations and flagged a huge impairment, which we'll tell you about in a few moments' time. Investors also have the federal budget to look to tomorrow, which may impact given speculation of tax reform. For more on that and the day's market moves, I spoke with Munjarra Capital CEO Alex Pikoulas. Alex, let's start with the budget, which will be handed down tomorrow. It's usually a non-event for financial markets, but this time around there's talk of tax changes, namely capital gains tax. Granted, nothing is concrete for now, but in your view, what impact could it have on the attractiveness of shares as an asset, and are there any companies that stand to benefit?
Well, look, Ricardo, it is going to have, I think, an impact at the margin on the stock market. It certainly makes changes the relative attractiveness of income versus capital gains. Obviously, capital gains are becoming relatively less attractive as the tax on them is going to increase. So what does that mean? Well, in a market context, there's a lot of different investors with different tax positions driving market pricing. So it's not going to be that all investors are pricing things differently because they've been impacted. So if you think about it, individuals are impacted, but superannuation funds, certainly in pension mode, who aren't paying any tax, they're not impacted, obviously. International investors aren't impacted. Institutional investors tend to pay very little attention to what the underlying tax rate is going to be that their investors are paying. So it's only going to be individuals who are impacted here and how they're thinking about what they're doing in the market. It's going to mean that growth stocks in Australia are priced a little bit lower, I think. Historically, growth stocks in Australia have attracted quite a big premium, even in an international context. You've had that hit pretty hard over the last few years because of interest rate increases, because of the SaaS apocalypse and other things. And so growth stocks have already underperformed. At the margin, this is another hit to those growth companies. So who benefits from this? It's the classic mum and dad, high, fully franked dividend yield companies that stand to benefit. They've already been performing pretty well in a relative sense, and that's going to continue, I think. So domestic banks, retail, and some of the resource names.
Okay, we'll wait until tomorrow to find out exactly what's happening with tax reform. Brent still above 100 US. That actually jumped this morning. Investors still hanging on every word from Donald Trump and any indication about an end to that war in the Middle East. How do you think the market has been handling all this uncertainty?
Look, I think the point that we've gotten to is the market is now taking it in its stride and is happy to bet on that there will be an outcome here and an agreement between the US and Iran. It's obviously been slow progress on getting a deal done there, and it's sort of waxing and waning, whether it's more or less likely each day. But the market seems fairly happy to bet that we're going to reach that endpoint at some point in the not too distant future. And I think that's why, as you said, Brent jumped today from headlines over the weekend, but our market's down 0.6%. And if you look at where our market is from its high, it's only 5.5% below its high, and the S&P 500 in the US is reaching all-time highs. So I think the market's very much taking this in its stride now.
We know that the higher oil price is flowing through to inflationary pressures and higher interest rates here. Deutsche Bank today lifted its forecast for the Australian dollar to around 76 US by the end of the year. How's the market viewing the potential for further rate rises here, and what are the implications of that?
Yeah, so the poor old Aussie consumer, 3 rate hikes already from 3.6% up to 4.35 today. The market is pricing that RBA rate to get to 4.7% by the end of the year. So another hike and some, about another hike and a third from where we stand today. The key thing here is where we were before the war happened. We already had a tight employment market with inflation starting to be a little bit of a problem, and high oil prices just sort of tip that over for the RBA. So I think that the big implications here are, as I said in the outset, the poor consumer. And look at some of the consumer discretionary bellwethers. JB Hi-Fi down from $115 down to $70 now, and Judo, which I would say is a bellwether for credit quality in the Australian market. It's gone from $1.80 down to $1.50 now, and house prices have certainly struggled a little bit in the last little while. So they're the two big impacts: the discretionary consumer activity and house prices.
Speaking of share prices that have come down, one company I'd like to talk to you about today is CSL. It was once Australia's largest listed company back in 2020, very briefly. Shares were worth around $300 back in 2024. They're now below 100. Shares smashed again today, another earnings downgrade and a huge write-down. What's your take on the company?
Well, look, what I would say at the outset is this is no longer the same company with the same outlook that everyone fell in love with some years ago. So a lot has changed here. And I think in particular, the competitive environment that they're facing has changed, which has been a big part of what the driver behind these downgrades. So they themselves are saying in the US, IG demand is growing at mid to higher single digits, yet they've got a problem with too much inventory in the channel, and they've had to push through some, trying to normalise the amount of inventory in the channel, and that's had a $300 million revenue impact. They're also suffering from higher competition in the Chinese albumin market as well. And then it's compounded that with the $5 billion write-down, which is a different issue. That's around the V4 acquisition that they did in 2022. And then the last thing is you've got a lot of people uncertainty left in CSL, with only an interim CEO in position at the moment. So they're recruiting for a permanent CEO still, and they're saying that's progressing as planned, but there's no news. And then the chief commercial officer they've announced his retirement today for personal reasons. So there's a lot of uncertainty, and their underlying markets have changed.
And in wrapping up, what are you telling your clients right now? Where do you see the opportunities for investors?
Oh, Ricardo, there are two very clear things for us. The first one is the AI arms race and electrification. The five big hyperscalers are spending $800 billion on AI infrastructure this calendar year. That's a well-known number, but what we're seeing is the flow-on effect down the chain, down the value chain of companies that is impacting and touching and driving earnings is quite extraordinary. You've seen a really strong reporting season come out of the US, and a lot of it is around that ecosystem. So we expect revenues and earnings to continue to be higher across that AI ecosystem. And the names we like there are, Microsoft, Meta, Nvidia, those standard names, Broadcom, ASML. And then the second one is fixed income. And we talked about higher interest rates in Australia. You can generate 8% plus returns in a very defensive investment grade fixed income portfolio these days. That is a fantastic component of an overall balanced portfolio. And that just wasn't the case some years ago. So fixed income should be a big part of your portfolio these days. There are some great returns on offer.
That is Alex Pikoulas there from Munjarra Capital, and he wraps up the podcast for this Monday. Give it a like, a review, and subscribe if you enjoy it. Don't forget you can watch On the Money during the 6:30 weeknight edition of SBS World News on SBS. The podcast returns tomorrow. It drops after the market close every weekday, and I'll catch you then. This SBS On the Money podcast is provided for informational purposes only and should not be understood as constituting advice or a recommendation. It is not personal advice, and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decisions.